There is a lot of things that the markets are watching right now in sense of commodities there, especially in case of gold prices, where you have seen gold and silver both turn negative for 2013. At this point, just barely holding around that 1605 mark in the European markets. Same is the case with silver as well, trading below $30 per ounce. There have been declines in the Indian markets as well. The rupee has been holding stable for last couple of sessions, and that has mirrored into the prices here. It's the base metal prices really that you need to watch out for. Some bit of a gain coming in today after 3 sessions of declines there. The copper prices are off their 3-week lows, nearly 0.25% of a strength coming in on the LME copper on your screens there. Let's get in then. Kunal Shah, he's head of research, Nirmal Bang, and he joins us live on the show. Kunal, hi, welcome. Let's start with precious metal first, and the kind of decline that we have seen. The risky assets are encouraging more money there. Ahead of the FOMC meeting, how would you want to, or rather FOMC minutes, how would you want to trade this space?
Well, in spite of the fact that it has been oversold, we are witnessing a straight 7 to 8 days of fall in the price of precious metals. I still feel there is more room for correction, and today at evening we have a US consumer confidence report. Anything above expectation in that report, I think that is going to trigger more sell-off in bullion. So avoid going long for the sake of intraday trading, and expect prices to decline further by at least 100 to 120 rupees during the course of the day. So the trend still remains bearish, and if anything new comes up in the minutes of FOMC, or any statement which is indicating that US economy is not improving, that kind of statement can lead to some buying. But as of now, till this risk-on rally is on in the risky asset class, the stability is there in the financial markets, gold prices are not going to do well.
So in that sense, Kunal, what's your range for the gold prices for the near term?
For the near term, we see a strong floor of gold at $1,580, and on upside, we don't see it moving above $1,625 to $1,630 in the short term.
Kunal, how would you want to take a look at the crude prices? Because after the jump up that we've seen for most of Jan and most of Feb as well, the prices have seen a bit of a decline, pressure coming in from various sectors there. How are you looking at trading this?
Oil, we have a view that oil prices can decline from here. We have seen this current upside because of the ongoing geopolitical concerns in Syria. I think this is not likely to hold on, and prices are going to decline. So oil, we have a short call. We recommend to go short in oil at 5270 with a stop loss place above 5320, and expect prices to decline and test levels of 5220.
Well, the recent data has been mixed, Kunal. We haven't seen much of China buying coming into the base metal sector. I mean, there was really a lot of hope onto that one once the Chinese participation came back from this week onwards, especially for the zinc prices, which is off its 17-month highs. How would you want to look at prices?
We remain optimistic for the outlook of zinc, mainly because of the surging premium in Japan, US, and even in China. So all of the 3 major consumers of the zinc, we have seen the rising premiums in the spot market. So the downside is limited in zinc, and from here one can initiate long position from 114.80, 115, and expect prices to move up and test 117, 1750 in this week, and the outlook remains positive on zinc.
Also a sense on copper, where the copper LME inventories are at around 2011 highs. I mean, there is pressure coming in. There's not much of consumption coming in from China. Do you think there could be pressure coming in for this space as well?
Yeah, we have a bearish view on copper, and we feel that whatever upside what we've seen during the Chinese holiday, all of that have been erased. Going forward, the actual fundamentals, which are bearish because of the rising production from China and rising stock levels in China, we are of the view that any upside will not be sustainable. So 439, 440, good levels to go short with the stop loss place above 443, and expect prices to decline and test levels of 432.
All right, Kunal, we'll let you go at that. So that's the view coming in from Nirmal Bang. Really, they are selling into gold, crude and copper, buying into zinc though for the intraday market there for the strategies on commodities.
Over to Bharat Kumar, Director at GFM for some commodity trading strategies. Bharat, hi, afternoon. Start off with your view on gold.
I think in case of precious metals, we are seeing negative divergence between the dollar index and the precious metals, especially gold. So to that extent, I think we may see further fall, especially if the market breaches around $1,598. We may see this fall to an extent of around $1,555. In case of M6 also, I think the trend is still bearish. One should hang on to the short positions and maybe re-enter the short positions at somewhere around 30,150 ranges. Unless the market closes beyond 30,220 ranges, we don't see any bottom happening in the market. On the lower side, we are expecting around 29,880 to 29,850 ranges. So I think in case of precious metals, still the trend is bearish.
What about copper? Would you be bearish on copper as well?
In case of base metals, we have seen negative divergence between the equity bourses, especially the Dow Industrials and base metals. Since a couple of days we have seen base metals selling off from the higher ranges, unable to sustain the week's highs. So to that extent, I think in case of base metals, one should still hang on to the short positions. In case of copper, we are seeing market testing to an extent, we are expecting market to test to an extent of around 433 ranges. Probably if the market closes below 430 ranges, even the medium term trend may turn bearish. But as of now, I think one should hang on to short positions, expecting around 433 ranges on the lower side.